With just 48 hours remaining on the economic news and Bitcoin still consolidating sideways, uncertainty and doubt is starting to build. In today's video, we are going to break down those walls of uncertainty, discussing the implications of the economic data on Bitcoin's price action, as well as the short-term price action and the macro price action itself. Let's go ahead and jump on in. Okay, MegaWhale team, welcome back to the channel. Thank you for tuning in. In today's video, we are going over three major points: the short-term price action, the upcoming economic data, and the macro charts. By the end of today's video, you'll have a detailed and well-rounded understanding of not only what is happening with the price action, what to expect with the economic data, but what all of it means and what implications it can have on the short-term and macro projections of Bitcoin. Before we do get into it, smash that like button, hit that comment button, and subscribe to the channel. We post daily videos of Bitcoin focusing on the facts, the data, the technical, and the structural information. No hype, no BS, no emotion, pure raw TA. Before we do get into it, go over to the Telegram channel. Sign up to our Telegram channel by clicking the first link down below. You'll get access to charts, updates, videos, educational posts, news events, and everything you need to stay in the loop of cryptocurrency with Bitcoin and the relevant economic news. If you are interested in taking your trading to the next level, join us on the VIP. You can get access to that by clicking the pinned comment in the free channel, by clicking my name or these links for more information. You'll get access to trading setups with exact entry prices, exact targets, exact stop losses, trade justification, exclusive analysis, and even our group chats, our general chat, trading chart and education chat, news, help, daily video, and of course, trade setup chat. If that is what you're interested in, again, you can contact me via the pinned comment in the free channel. Let's go ahead and dive on in. So as we can see, a quick summary for the last 24 to 48 hours of price action, we really haven't seen all that much high time frame movement. We're very much consolidating sideways on the short-term time frame. Bitcoin has, however, really established that base of support, now being a 4-day base of support at this $69,150 to $69,000 region. We have since seen a rally toward the upside, retesting the prior range of support at 70,100 to 70,200, but we have since seen a rejection, validating this as a support resistance slip and an area of key resistance, and thus a bullish trigger point moving forward. We'll come back and discuss in detail what is happening and what to expect in our short-term analysis in today's video, but let's start on the market data. Taking a look at our market data, moving over to our volume, we can see volume is up 45% over the last 24 hours at a total of 88 billion. This is quite standard as we enter the new week. As we come out of the weekend, we generally see volume rise. Looking at our liquidation data, excuse me, 138% increase in 24-hour liquidations, sitting at 96 million. Of the 96 million, 75 million have come from long positions and 20 million have come from short positions. Again, going back to the short-term price action, we have seen a whole bunch of volatility in the last 24 hours, really chopping up and all the way back down, liquidating those late entrants on those high leverage positions, particularly people entering in these areas of liquidity. Moving over to the broader markets, the DXY. We're going to be jumping into the DXY in massive detail today, but more specifically focusing on the implications of these economic events in just a moment. But looking at the price chart over here, again, we have broken out of that short-term downtrend. The DXY has reclaimed that yearly uptrend, and we are currently still in that overall yearly uptrend. The direction of the DXY is going to be heavily influenced by the upcoming economic news, which we'll be discussing in a second. So we're not really going to sit here and give too many price projections. All we're going to say is if we see economic news such as the CPI and interest rate data that is bullish, that is in favor of the risk asset market, we will likely see a weakening dollar and thus the DXY will drop. Whereas if the opposite occurs, we see raising inflation, we see no indication of rate cuts, we could potentially see a DXY increase and thus the risk asset market could suffer. Moving over to the broader markets, the S&P 500 is still looking very strong, again, closing a fantastic weekly candle above that prior weekly high at around $5,300. We are still looking for directional continuations well and truly into that $6,000 region if we are able to sustain above 5,000. Again, 5,000 is that major trigger point. If we were to delete everything on the chart, if we're just looking at that 5,000 level, if we break below 5,000, we enter a high time frame downtrend. That is when the trend flips officially bearish on the high time frame, looking for targets of these prior highs. Until then, we remain above 5,000. We are expecting directional continuations into new highs, as we are still seeing and we are currently seeing on the short term. Overall, looking fantastic. Moving over to the Dow Jones, a very similar scenario over here. However, the Dow Jones is lagging quite a fair bit from the S&P over here, still sitting underneath its prior high point. And that isn't too much of a concern. Again, we are on an uptrend and therefore the trend is your friend until it ends. So it is only if we lose our prior low at $37,700 will we expect a high time frame downtrend to originate. Until then, expecting those directional continuations higher. Let's go ahead and jump over to the economic data and Bitcoin. A quick word from our video sponsor before we do. I'd like to introduce our partner, BitUnix. BitUnix is a global, non-KYC, no country restriction exchange, making it a perfect exchange to trade on if you're from the USA, from Canada, the Netherlands, or just prefer to trade without KYC. This exchange is a futures and spot exchange with over 200 different trading pairs, and some of the lowest fees in the game. If you sign up with my link down below, you'll get access to 15% off your trading fees, as well as an exclusive reward center where you can claim up to a multitude in USDT prizes. So go ahead and sign up with my link down below for 15% off, and I'll see you in there. Okay guys, let's go ahead and jump into it. And on the short term, we're going to be starting with, of course, the economic data, jumping into the short-term price action, and then finishing up on the macro. So as we know, in the next 48 hours, we have some major economic events coming up. We have got CPI data, we have got interest rate data, and we have got the Federal Reserve press conference. First and foremost, guys, we can see on CPI data, we are looking for a bullish result, which will be either the actual result being lower than what is forecasted in previous, or again, equal to. If we see the actual result come out higher than what is forecasted, we will likely expect a bearish reaction in the market. So let's discuss why that is the case and what that means for the higher time frame. This is going to be our graph we've drawn up, which shows the trajectory of perceived systematic risk, which is the basis of, again, investors' decisions in the risk asset market, and how inflation data can influence the overall direction of potential interest rates in a future period. So first and foremost, we have to understand that inflation is a leading analytical tool for interest rates. If we see inflation increase over a long period of time, we see interest rates eventually rise. If we see inflation decrease over a period of time, we eventually see interest rates decrease. And that is generally what we see in the economy. So we're looking at this analytical tool over here, this data, this graph set. What we have seen is recently in the last couple of months, we have more or less seen inflation plateau. And this plateauing inflation has a consequence as it results in interest rate uncertainty. What we saw in the prior 6 to 12 months, we have been seeing inflation slightly come down, and with that, the narrative that interest rates will eventually come down has been strengthening. We saw a very strong narrative that we are going to see interest rates cut in early 2024. That was then moved to mid-2024, and now that has been potentially moved to the end of 2024. So we're seeing that narrative start to weaken, and as that weakening narrative has been setting in, has been a consequence of inflation more or less being pushing sideways. So as inflation pushes sideways, we start to see uncertainty develop around the perception of the future interest rate trajectory, which forms the basis of perceived systematic risk. And as a consequence of that, within the risk asset market, we have seen a whole bunch of consolidation, whether it be on S&P 500, whether it be on Bitcoin. As a consequence of that developing uncertainty, we are seeing this consolidation. Now remember, the reason why this is so significant is because the interest rate data directly impacts the trajectory of price action. If we look at the overall trajectory of price action over the last 12 months, the price action immediately started rising again as interest rate data began to plateau, as it is the perception of a future interest rate reduction that forms the basis of decreasing systematic risk, and thus investors jump into the market trying to front run that event. So it brings you to another question: if we do see interest rates cut, will we see a negative reaction in the market? And to answer that very quickly, we have to go over to this chart. This is going to be taking a look at CPI and interest rate data impact on the risk asset market, and this is particularly important for Bitcoin. If we look at our upcoming events, we have got CPI. CPI data itself is not an event that has direct consequences on risk asset markets, meaning we don't see a direct, it is more of an indirect consequence. It impacts the risk asset market because what CPI data means in terms of future possibilities for interest rate changes rather than inflation data itself. Remember, what is good or bad for the economy is not always going to be good or bad for the risk asset market. So when we see inflation data, this is going to give us a good indication of what future interest rates are likely to do based on our chart above. Interest rates are very, very important. Again, interest rates control, most importantly, the cost of debt. And if we start to see interest rates decrease, we see the debt to service ratios for companies decrease. And over a period of time, if debt to service ratios continue to decrease, the available cash flow these companies have to invest in risk assets increase, and we start to see more of these big, large corporations and companies park money in the risk asset market, pushing asset prices up. So if we look at the bigger picture, is falling interest rates bullish for Bitcoin and bullish for the risk asset market? On the macro scale, it is, but it takes many, many, many months for those debt to service ratios to decrease to a point after which interest rates have decreased to facilitate an environment of which more money can be parked in risk assets. So again, at the initial moment of which we see interest rates come down, we may see a short-term bearish reaction because, again, the narrative that has been pushing price action upwards, okay, the narrative that has been pushing the price action upwards is that interest rates are going to come down. So when we have that narrative conclude, there is no more narrative that is pushing the price action upwards. There has to be two things occurring. Number one, a new bullish narrative needs to take place, or we need to see a significant amount of money or liquid cash come into the market to push it upwards. So number one, a new narrative that could take place would be maybe the Federal Reserve starts printing money. And number two, liquid cash coming into the market to push the market upwards will be a direct down the line consequence of falling interest rates as debt to service ratios slow down or decrease, but that takes many months for it to occur. So when we're looking at this data, guys, we look for, again, the most bullish scenario would be inflation data remains normal, okay, equal or decreases, with the most bullish narrative for Federal Reserve is going to be a pause, okay, and the most bullish narrative for the Federal Reserve press conference is going to be strong confidence in a future interest rate reduction. Remember, it is the narrative that drives the price action because the market is future seeing. It moves on perception of risk, not actual risk itself. Keep that in mind, guys. Let's move over to short-term price action. Let's jump into it. So Bitcoin really hasn't done too much, like we've said. We are more or less chopping sideways. As we can see, I've gone ahead and annotated some very key levels on the chart over here that you need to be paying attention moving into these economic events. And as we say already, as we'll say again, if you are not experienced as a trader, particularly if you are not experienced at controlling your risk, you should be avoiding these conditions. Okay, these conditions are very tricky to trade. Look at the chop. The market flips up and down rapidly. There is no distinctive pattern formation. Our momentum indicators are fairly poor when it comes to chop zones. Okay, we get a lot of false signals. So it is best to remain patient and reactive rather than predictive. That means reduce your risk, reduce your capital, okay? Reduce your trading volume, okay? And make sure if you are in trades to reduce your risk to zero sooner than later and take profits earlier than you normally would. These are risk management tools you should be implementing in times of high risk, particularly moving into high risk news events. So looking at the short-term price action, it is very unlikely Bitcoin is going to make a directional move. And by directional move, we need to break above that prior resistance and break below this current support. It is much more likely we continue to chop within this range moving into the news than not. Again, we drop down as a consequence of uncertainty. We are moving sideways as a consequence of uncertainty moving into the news events. So until we see the data of these news events, it is unlikely the market is going to make any complete directional movements opposed to just liquidity grabs. Now let's take a look at the price action and the structural levels. If we want to see the bulls take control and push the price back up into these highs, 72,000, we need to see this prior resistance establish and break through. We need to see the price action break through this resistance. If we take a look at the VRPV range, we can see a massive divot in the VRPV at this area of liquidity, suggesting to us this is a bullish trigger point. Therefore, a break of 70,200 will trigger a continuation. We are looking for continuations to 71,000, and we're looking for continuations to 71,700 if that is able to occur. On the bearish side, guys, there are two bearish scenarios. Number one, we have to be very cautious for liquidity grabs, looking for liquidity grabs to the price point of 68,900 if our base of support of 69,150 to 69,000 is unable to hold. Similar to what we saw on the top side, liquidity grab to the high range, we could see on the bottom side a liquidity grab below that low range before directional chop or continuations from that point. So I'd be very closely watching potential reactions at this base of support, and I'd only be confident that we're going to see directional continuations downward if we were to break below this bearish trigger point. So a bearish trigger point sitting at 68,900, a loss of 68,900 would likely result in a correction to our prior low at 68,300. Watch out for that on the short term. Again, looking at the VRPV, we can see a massive cliff underneath that 68,900 region, suggesting that a loss of 69,000 is likely to result in increased bearish volatility and thus a correction toward that downside. Let's now go ahead and briefly zoom out. If we zoom out on the higher time frame chart over here and delete all these annotations just so we can see the chart a little bit more clearly, we can see on the 4 hour we are sitting very much still above that major area of liquidity, and if we zoom out even further, we are still sitting above the $67,000 to $66,000 support. So provided we can sustain above 66 to 67,000, the high time frame charts are still relatively strong. It is only if we drop below this level would we pose any risk of dropping into the lower half of the high time frame horizontal consolidation. Remember, we are in the upper half. This is the bullish zone of the high time frame range. While we remain above the midline of the bullish zone, the probability for directional breakouts are greater than probabilities for directional continuations downwards. Keep that in mind. Let's go ahead and zoom out to the daily chart one more time. A lot of people are worried, is the bull run ending? Are we, to answer very simply, guys, we have to look at the trend. The trend is your friend until it ends. A very simple saying. If we zoom out, this was our bear market low. We're taking a look at the macro charts here. This is our bear market low, our bear market resistance, our bear market low, okay? This is a yearly bear market resistance. When we broke through this resistance on the 23rd of October, we officially entered a bull market, okay? We were in a macro uptrend for a long time, but we officially entered a bull market at that point. The bull market uptrend has been established from the prior low of the breakout and the first retest or the first higher low developed after the breakout of the yearly resistance. Therefore, this diagonal trend line we can see over here on the right hand side of the screen is in fact a representation of the 2024 cryptocurrency Bitcoin bull market, right? So provided we remain above the bull market uptrend, we are moving in a overall macro upward trajectory. Regardless if we chop sideways, regardless if we see a correction downwards, upwards, it doesn't matter provided this trend line is able to sustain. So a lot of people are going to say we're in a bear market, we're not in a bear market. Bitcoin is literally up 300% from the lows. All we are seeing now is 100 days of sideways consolidation, which absolutely sucks, right? It sucks. But that is the reality of the market. We get these phases of consolidations. And when these consolidations ends, we see expansion in price action. So when we see this consolidation come to a completion, we will see expansion, or if we fail to hold, we will see corrections to our bull market uptrend. And it's only if that bull market uptrend is lost do we say, well, looks like the bull market is over. It looks like we enter a high time frame downtrend. That is where we're going to end the video, guys. Thank you for watching. I hope you have a fantastic day. We'll catch you guys on Thursday to discuss the result of the economic data and whatever implications that may have had on the price action, and jump into it then. Have a fantastic rest of the week. We'll see you then. Bye.